we're talking about like $200 silver,
Hmm.
probably spike higher on the shorter time frames. Have some probably higher, like triple digit silver is, I don't want to say it's a guarantee, but you know, it's like this is, as long as the price stays above this rising support line right here, where silver is just going to keep going up and up and up, and it logically it should look something like this, you know, a little correction here. I don't know, could go like that. There's probably going to be just one more halfway flag here somewhere. That and this would be, you know, at 75 bucks, $70. I don't know where this pattern is going to be breaking out. That will probably be the next greatest entry for silver, will be back then, equivalent to this January 2024 candle breakout there.
You're watching CapitalCosm. My name is Danny. It is December 8th, 2025, and my guest today is Patrick Karim from NorthStar BadCharts.com. Patrick, thank you so much for coming on, my friend.
Danny, it's always a pleasure talking to you. Even like, you know, before we record, we always have a great talk, and hopefully there we get to cover some good charts there for your viewers.
Yeah. And I have no idea what we're going to talk about. We just got done talking for about an hour about everything but the markets. So let's go ahead and kick it over to you. What's hot on your radar screen right now, Patrick? What should investors be most concerned with?
Well, I think everybody wants to know what is happening with silver. I'll pop up the chart, and let's just give some. Where's my silver chart?
There it is. Oh wait, that's the Fed funds rate.
Yeah, always looking. Okay, so let's remove indicators, remove drawings. All right, let's start fresh. All right, here's the silver chart. Okay, this is great, guys. I'll start with the big picture chart just to show you what's happening. And this is something a message I'm trying to pass across is, when you're looking at a chart, guys, always first step, look at the time frame. So here I'm on the 12-month candle chart, guys. So each of these candles is 1 year of data. A lot of things could happen. You could have some crazy pullbacks on the shorter time frames. You could have a whole bunch of stuff happening. But this is important because a yearly defined breakout, like we're going to have this year here. So in all likelihood, there, silver is going to close all the way up here. And that is one crazy pattern that you'll see probably just once in your life, because the time it took for this pattern to morph into existence, which going to minimize everything here, it took 50 years, right? This is the 1979, 1980 top. And you see, look, the wick, all that wick there is noise from the smaller time frames in the 2011s. But this is the thing about silver. We're getting the breakout, and a measured move is already reached. Silver is so volatile. Sometimes, look, it's just, what do you want me to tell you? If we had the breakout and silver closed, let's say at 36, right there, we wouldn't have this whole green candle right here. I'd say, okay, we're probably going to run hot in 2026 at the beginning. But now we've had this pull, flag, measured move here. So here, pull, flag, pull. From a classical TA perspective, we've already reached a measured move, guys. And again, I'm not saying that the trend's over, guys. The trend is 100% going up, right? Higher lows, higher highs. This is a bona fide uptrend. So long-term stackers, well, stackers don't even care about the price, but long-term anything, this is going up. Now, if you're on the sidelines and you're there and you hear your friends talking about silver, and now everybody's talking about silver because silver went up in price, and that's the same thing that applies to Bitcoin, right? Remember when Bitcoin's 125,000, or the first time Bitcoin was 70,000, a couple of years back, everybody, your cab driver, everybody was talking about.
Well, let's do an experiment here, Pat. I want to ask the audience, do you hear anyone talking about silver or gold in your circles? Because, I mean, aside from one or two friends on my end, like, I haven't heard a single peep from anyone. I don't know about you, but like, do any of your normal casual friends, I mean, do they ever talk about gold and silver? Drop me a comment down below and let me know. But yeah, didn't mean to interrupt. Go ahead.
No, that's fine. And nobody's still talking about silver there. So in that regards, the only time is when I went to see a hockey game recently. I had my Uber driver asked me if what I thought about silver. He didn't say buy silver. He said he asked me about it. So it's coming up on people's radar. But look, sometimes you get you get those sentiment readings off people, the amount of people talking to you about it. But that could also, they could keep talking to you about it for years and years, and the price goes up, right? You can't be contrarian and say, oh, because people are talking about it, the price has to go down, right? With hindsight, often we're going to backfill that. Oh yeah, of course, my hairdresser was giving me, tips about buying silver and gold, and then the price went down, and then it's okay. Of course, that was a top with hindsight, but I wouldn't rely on that as a chart trader. Seriously, I would just look at the actual chart and see what it's telling me. So right now we're in a long-term uptrend, guys. So that's done. We've reached a classical TA measured move. I'll show you here some more examples. So here, let's say in the 2000s, we had a breakout. And then after that, we had a flag here with the GFC. And then after that, I had that, whoops, here's that measured move. See it, we reach a target here in that wick. So I know people, I love, I don't want to, this time it's different, the comics, whatever there. What I'm telling you is silver right now is run from a classical TA perspective as defined by this pull flag target. The target's reached, it's reached. It doesn't mean it can't go up higher. It means that the energy created into this consolidation here, we've reached that target. If anybody would take profit selling to strength here, you can't blame them. You cannot blame them at all. Now, that said, the higher, that's the monthly chart. If somebody wanted to, let's say we zoom in on the weekly, on the quarterly, remove drawings, reset chart. Here's the quarterly chart. Here, the last low risk entry, guys, was back down here. And also on the quarterly chart, it's stretched. Here at the bottom, I have the distance from that 36 quarter period moving average. As long as the price is not close below this line, you are fine, guys. It's the trend is still intact. There's no correction started or visibly started right now on the quarterly chart. So it's an uptrend, right? But you have to expect eventually a correction here. There's
so is that the distance for moving average at the bottom?
Yes. So the bottom is telling you how far, I'm going to show it here. How far is the price from that red line? And you'll see here, see that distance? We are in outlier territory. We're as high as we were in the melt up top in the 2010, 11. We're as high as we were in the melt top in the 79. And we're as high as we were in the first run up in the early 70s. We're that high, and we're higher than we were right before the GFC crisis. So I know while everybody's living on euphoria, on the fumes, you have to expect, and you'll see these sideways move. Here's a tiny one, a multi-quarter one, and this was just a huge fall down. Eventually, you will have a multi-quarter sideways move. It will happen, right? We don't know how long it's going to last. So this is right now. If you're on the sidelines, look here, guys. Even in the 70s, this was like a year there. It lasted 2-3 years there. These are quarters, huge corrections. The bias right now is a correction is more likely than not likely. It hasn't started yet, guys. The price, whether the correction starts where it's 65, 70, everybody they're at they want to fine tune and spot that top, guys. Doesn't work that way. We're in a zone right now where, with hindsight, it's going to look like this, guys, a little bit. I'm just going to put these circles here. Here's one. We're in a zone here. We're in a zone here. We don't know when. We're going to have to wait until the price actually starts going down, guys. We're in a zone where we could have one of these corrections starting to pop up here, whether it's like a GFC one, whether it's like the 1970s one. Look, what do you think people were saying back in the 70s here? Stagflation, inflation, money printing, whatever. Look, when the price was rocketing upwards, Danny, weren't people just feeling like they were on top of the world, that they broke the bank, that the Hunt's brother would, whatever, like all the narratives, all the bullish narratives that we had in 1974 probably supported and convinced people that this thing was going to rocket instantly, immediately to the moon, right? Well, guess what happened? From 1974, it peaked, and it only broke even, or at least bottomed in 1976, 2 years later, and it actually broke out 1978. So it took 4 years for that thing to play out, So Once you're stretched like that, you're
Okay,
stretched.
so essentially, consolidation is not out of the norm. I mean,
No, it's not out of the norm.
this would
Yes.
be historically precedent to have a consolidation,
Yeah,
and that doesn't mean that the bull run is over. It just means that it
exactly.
needs to take a bit of a pause.
That's right. And you have a background in statistics and all that, or anybody is going to appreciate that. Is you'll have a correction here, and because with that stretch on the quarterly, the correction could be multiple quarters, right? Sideways price action, and you want that to have your next lower risk entry point. You want that, right? Because if you're on the sidelines, guys, and you see price like that, there's no way somebody objectively can tell you, yeah, that's good. Go in. If I would tell you that, I'd be no better than the Bitcoin maxis telling you to buy at 125, buy at 120, and buy at these crazy levels where the price is stretched or there's no actual breakout. I would be telling you a disservice, feeding into your bias, try to confirm, because you want to buy in, right? I'm just telling you that the low risk entries, and this is all over X, guys. I posted this exactly when it broke out back in 2024 there here on that quarter. And I said it broke out, guys. That was the time you should have been most bullish. And people, they only feel bullish after price goes up. It's almost like human nature, right? How could I be bullish if the price doesn't go up like hundreds of percent? No. Yes, the price does have to go up a certain amount to get bullish, but you're bullish after a correction, a consolidation breaks out. Look, think about it this way. Do you want to, let's say I'm going to wherever, let's say I'm in Montreal and I want to go to New York. And I enjoy riding on the highway. I just enjoy that. I want to get the maximum amount of time on that highway. I love it. I want to go through Vermont, New Hampshire. I want to go through all that. I want to enjoy it. Are you going to jump in on the highway when you're close to New York and then not enjoy a little bit? Or you want to get in on the highway right as you're leaving the local neighborhoods in Montreal and you're just getting on that highway that's going to bring you to New York? You want to get in as soon as you get on the highway, leaving Montreal to head to New York, and you're going to enjoy that ride. And that, all this zone here below that black line, guys, essentially what that is you in Montreal, filling up the car with gas, going through the small roads, leading up to the highway, but you're not there yet. Sometimes you get a detour. Oh, we forgot something at home. I have to go back home. That's, it's all like you're wasting time. But as soon as you get on the highway, the chart's going to tell you, Patrick, this is when price is going to start accelerating upwards faster. It doesn't have to do it this way, but you have the higher chances of having an explosion of price away from that moving average. It happens once you get on the highway. That is when you get on, guys. If you missed it, you missed it. You can't sugarcoat it. That you can't keep going on YouTube channels and only follow people who tell you it's going to the moon, going to the moon. That is a disservice to you guys. That's the low risk entry for me. I want to get in here. I want to ride this because eventually there will be a destination, right? And the further you're along that road, that highway, the further you wait to get on that highway, the closer you are to your destination. And then after that, if you didn't enjoy enough of that, that nice highway driving, you're going to refuse to get off the highway, even when you're at destination. And that's when you head into trouble. That's when, you have to fill up the car with gas. That's when, you need a tire change, whatever it is and you're going to be trapped. So please, guys, make sure you look at these charts. Silver, same thing with gold there. Let's hop onto gold there. Mm-hmm. It's 100% an uptrend, guys. Don't construe this as not being an uptrend. But the low risk entry for gold, there's not many of them there. There's not many on a historical massive here. 1, 2, 3 here. July Q2 2003. You could make an argument that was one of the greatest entries ever. You ran that all. That's where you had to enter. That's where you have to be the most bullish. You're not most bullish in 2012 at 1700, and you're not most bullish at 900. You're most bullish at 380 because 380 is the area where you're going to make the greatest gains in the shortest amount of time. You're not going to make as much gains entering at 800 than you would at 350. It's down here, guys. And here, look at this beautiful one. I love showing this one. On the monthly, it's brilliant. On the quarterly, guys, look at this. A beautiful line like this. The market is telling you, my goodness, look how pretty that is. I'll put on the line chart. 1, 2, 3. Look at these beautiful touches. A valid trend line is three reactions. Now I have 1, 2, 3. I have 4 reactions. That once you get that close, and look at that close. Beautiful, strong candle. Not many sellers. There's the upper wick, guys. I'll zoom in there. There's not much of an upper wick here. That was the generational opportunity in the past 5 years to buy gold, was at 1360, 1370. That's when you're getting on the highway and you're running up. Here after that, you had a huge correction. See, anybody who got in here at 1750, the further they were away from that entry point, the more statistically you have a chance of entering a correction. And here's an important correction. And look at that, another one. Look at that. I'll put on the line chart. It's so beautiful. 1, 2, 3. And all this, guys, all this stuff was posted on X. It was posted on our website. It's not about, I don't want to say I told you so, but you're able to start spotting these patterns as they morph into existence. It doesn't mean they always produce these results, but if you have a chance of having these crazy results, well, these are the patterns to look out for. And a beautiful close. And look at that. Look at the run we've had. Crazy, crazy run, overextended expectations. And look how we are stretched historically. Danny, look at that. We're above here. We're so above any point we've had ever in the 2000 bull run. And now we are in the crazy 1970s type of era. And guys, I'm not bearish. I'm telling you, the lowest entry, forget about it. Forget about it. I don't want to say I would never buy gold at this price unless I would be a stacker. Only stackers, true stackers, should be putting any money in gold right now. True stackers. People who don't care about the price and just accumulate ounces. But traders or even long-term investors, the better entry points, guys, they're down here, 2019. They're down here to October Q4 2023, and that's it. You just had those two shots. What's that Eminem song there? One shot, one opportunity there. Well,
yeah, and I'm looking at the slope of that distance from moving average line. It looks a lot steeper than any other point in 2000, and maybe even the 70s as well. I mean, no, the 70s was a little steeper. Let
me drag it. Let's see here. So here, the 70s. Oh, it's exactly like here.
Same, yeah, it's the exact same
one here. It's yeah. So the 70s had a crescendo. It's slow, and then it just accelerated faster. But you're right. The 2000s is more of it was a slower grind up. And I think we're not in the 2000s type of area. What I think is going to happen there, I think we're down here now, somewhere like 1960, late 1960s there. And I think the crazy moves in gold, they haven't happened yet. They're going to happen next, right? Patrick, you're contradicting yourself. You're saying not to enter, and you're telling me there's going to be a crazy move for gold. No, guys, you're not listening properly. What I'm telling you is the low risk entries, before those crazy moves happen, they look like this. They look like this. If they don't look like this, then there's no low risk entry, guys. There's just not. So what I'm expecting, what I hope for you guys, the people on the sidelines and who want to play gold, I would love for you guys to get another shot. And because I think that the gold price is not done going up there. It's going to go up much higher, but it's so weird there. Because
what would be a good range to look at? I mean, what are you targeting for a good entry point for gold at this point? Hey guys, quick pause from the podcast, but this is something I feel is really important to let you in on. Back in 2020, before I even started this channel, I was looking for an edge, a way to find the big opportunities most investors never even hear about. That's when I found Capitalist Exploits Insider. From day one, it felt like I suddenly had my own team of world-class market pros working for me, digging up trades all over the world, doing the deep research, and handing me ideas that had massive asymmetric upside. Stuff that I would never even think about. Since then, my gains with them have blown past the S&P and the NASDAQ, and it's honestly the single best newsletter I've ever subscribed to. And that's not me blowing smoke. That's for real. I've interviewed their publisher, Chris McIntosh, more times than I can count. In fact, my latest conversation with him is linked in the description box down below if you want to check that out, as well as a pinned comment. And every time, I'm reminded why I've stayed a member for years. Right now, they're offering a special $1,000 discount on the Insider subscription, but it's only for CapitalCosm viewers, so you're only going to get it by clicking the link down below in the description box or the pinned comment. You're not going to find this anywhere else. Click the link, lock it in, and start getting the same game-changing research I've been using since 2020.
It has to morph into existence. So step one, we have to enter a correction. The distance from moving average has to do this. it has to reset, and then the more it resets, the more the price resets close to the moving average, the better it is. So I don't know. Look, this is pretty extended there. I don't know if it's going to do that way, but you need to let that moving average catch up. I'm going to draw it how I'm expecting it, not expecting it, but possible. So here's let's say the moving average goes up, and hopefully, I don't know how aggressive. Sometimes you have rising patterns. Maybe this is going to be the play zone. I would, and this is another thing that makes, I think that it's a lower risk entry if you get a structure like this there. My goodness. Let me blow that thing up. I could probably enter gold at 6,000 and consider it a lower risk entry than entering it here. I don't know if that makes any sense, guys. It's about the structure that set up the explosion in price. That's more important than where the price actually is. So let's say the price does go, it meanders for a couple of years sideways. Let's say this is the consolidation there. I don't know. And it breaks out here. I think this entry price would be much better than entering here, even if it's 30% higher, right? I don't know if
is that because it's a confirmed breakout at that point?
It's because, well, yes, because you're at the confirmed breakout, but because the price has reset, all the people who bought lower, who want to take profits, this is what a correction is, right? It's people, hey, what do you think is going to happen after? People are going to start taking their profits, right? People who bought in 2019, people who bought in the 2000s, people who bought in 2023. Eventually, that's why these classical TA measure moves, they work out pretty good, because it's just, the psychology of the people. Eventually, they're going to want their profits, or there's going to be macro environments where, okay, now it's going to be the SPX turn, there's going to be a rally in the SPX, and then, it's like... So the price going sideways resets all that sentiment. The profit takers disappear, and the new, not the new bag holders, but the new range of people are going to put a bottom under here, right? If people are going to keep buying or selling, the price is going to go down a little bit because not enough buyers. But eventually, the buyers, there won't be as much sellers. They're going to be buyers are going to keep buying, and then once you get the breakout, yes, you have a confirmed breakout. And confirmed breakouts, what they tell you is you're just getting on the highway. And look at this, every single time you had this just getting on the highway environment, bam, bam, explosions. So you gotta wait for those, and they're just look at silver, man. Look at silver. You need these corrections along the way there. They create. Show me on this chart, guys. Silver going crazy in price without a correction before. Show me. It's impossible. You will never see silver going crazy in price without a beautiful correction, a setup where nobody talks about silver anymore. You need these setups here for the explosions. And look at this beautiful setup here. That one was one for the ages. And then bam, just silver price just rocketed upwards after huge correction. You need that.
What's the final forecast on silver based on the cup and handle that we see here?
Yeah. Well, yeah.
What are you able to project based off of this 40-year breakout?
Sure, let's do it. So the shorter term move is reached. So whatever that move was here, we're pretty much close to it. Let me put my big line. Here's my yearly here. So let's say that move's pretty much reached. We're in the vicinities of that classical TA measure move, but this is the one that everybody we're talking about like $200 silver. Probably spike higher on the shorter time frames. Have some probably higher, like triple digit silver is. I don't want to say it's a guarantee, but it's like this is as long as the price stays above this rising support line right here, where silver is just going to keep going up and up and up, and it should look something like this. A little correction here. I don't know. Could go like that. There's probably going to be just one more halfway flag here somewhere. And this would be, at $75, $70. I don't know where this pattern is going to be breaking out. That will probably be the next greatest entry for silver. Will be back then, equivalent to this January 2024 candle breakout there. Look at this thing here. That's just beautiful, this breakout. So eventually there'll be a pattern here that will create this opportunity, just like the GFC one, explosion, sideways move, explosion. But yeah, triple look, it's not. And guys, how many times have you seen me do a bearish target for silver? When I mean bearish, not that I'm telling you that I don't think there's a low risk entry or that, how many times have you seen me do this, right? That's me covering all angles. That's me playing both sides of the coin, right? When I'm telling you it's bullish, but it could also be super bearish. People are getting upset, Danny. That's how much euphoria there is, kind of, that if you don't put these crazy up targets, people, they're kind of unhappy with you. But I can't.
And it's healthier this way too. It's healthier than having these wild swings to the upside that will eventually have to crash back down to come to reality. As a relatively slower moving market to the upside is a lot healthier. You're able to accumulate wealth. You're able to accumulate silver at a much more predictable rate, and you'll probably be better off for it. I mean, you'll have more time to accumulate without the price getting ahead of you, and you will get. I mean, I don't know if you will, but it would appear that the price does have a lot of headway to come from here on out, just maybe not in the nearest of near terms.
That's right. There's a long term. Anybody holding silver for 10-year horizon will do just fine there. Will do, they'll be fine. But most people, they're using TA to get that long-term picture, but they also, a lot of people, they don't have a 10-year horizon, right? So they're going to go zoom in on the monthly chart and they're going to try to maximize this. And then of course, like we just covered, there's no low risk entry here at all, guys, at all. How many times could I say it? It's like, I know the comments in your YouTube channel there on this video, people are going to get upset, charts, mumbo jumbo, but guys, I'm trying to show you evidence that it's up and sideways, right? And now we're completing the up move, guys. Like how greedy do you guys want to get there? How much longer do you want to pump this emotionally to people? And you're almost making a disservice, guys, to new people on the sidelines, because even if the price does go up to 75, $80 there, it's not I told you so, Pat. No, it doesn't change the fact that the low risk entry was still not here. I don't care if the price goes to 120 from here and rockets upwards. It doesn't change the fact that statistically, this is not a low risk entry. It's just not there. You can't maybe say that. There's no evidence for that. You actually have the contrary. Even in the 70s, guys, eventually there'll be a huge move up, huge consolidation, huge move up. Look, I'll show you. I'll do this exercise for you, man. This is a good one. I'll show you the analogs, remove indicators, remove drawings, reset chart. I'm going to use this there. I know you don't trade off analogs, guys, but just to show you in context, this is the move that silver did today, the red line. Just drag it up. Okay, so let's see how this red line behaved. Oh, look at that. It looks, I could compress it in time, but if this is a redux of this up move correction like the 2008, look at that. We're almost at target on this analog move, right? Guys, there's just so much energy here. Here's another analog move, sideways. You see that explosion? We're almost at the target of this one here. Even if I start a little higher there, look at that consolidation, explosion. So even at the 2000s, no matter how I put this, we're in the we're in the froth territory.
Oh,
look at this here. Was that Danny?
Go up to the second one.
Yeah, I'll do it after. Look, so here's the first one where we see we're closer to the end than the beginning, right? Okay, please be the devil's advocate on this there to help. And look at this. Look at this one here. Yeah, this is the only one. This is the only one where we're probably halfway through. But the entry was down here, right? You got to agree the entry is down here somewhere. It's not halfway through, right? So people now, they're hoping for this outlier thing there to justify entering at these prices. But you're not putting the statistics in your favor, because that's an outlier situation here, right? This is the one out of those 5 or 6 other times I showed you that it did that, right?
Well, so, if there's anything else you'd like to wrap up on the precious metals side, feel free to do so, Patrick. But I want to ask you, where do you see low risk entry in at the moment? Which asset?
Oh goodness, probably oil plays. Some of the oil plays are just like crazy nice there. I'll show you. Look at that. Look at that. from all the look at this. This is Exxon, guys. Look at this thing. If that thing breaks out, that is just bonkers. Here's a Shell oil. Shell. That thing, when that thing breaks out, let me show you that. That's crazy. Look at that. Could be right there. Look at this. That's crazy there. That's look at that. That's what you should not consolidation correction. That's what you should be looking at. There's even was it Copex? Even the copper miners there. Some of the copper no, not the copper miners. They're already copper miners are already run. Copper, I think.
What about OIH? What about the oil service companies?
Look at that. Copper's breaking out also here, Danny.
Yeah.
OIH. Not as nice as it's probably XLE looks better than that there. So OIH, it's not quite ready yet. I think XLE looks better. Yeah, XLE, if it could manage to get above that, it has to get above that line, but at least it's getting. Yeah, it has to get back above, but it's coiling and tightening for the past 2-3 years there. That's probably where the next lower risk opportunity is once the oil sector breaks out there. That's much better than buying something that's already skyrocketing high. And this is another one. I just want to show you the miners. This is the miners priced. So miners performance versus XLE. I just want to show you how the goodness. Where's my line here? They are in. So here is when, as soon as it starts turning down. So you see the miners here. They're starting to be in outlier territory versus the oil plays, right? It's like they've been oscillating for all this time. It doesn't mean that it could break out and keep going up, but the miners now, they're starting to approach an area of outlierness, and it's all good, guys. They're outperforming the oil plays now. There's no issues about that. But eventually, as soon as you lose that rising support line, you got to be careful because now it could be time to favor the oil plays once that rising trend line is closed below. So if somebody wants to be a contrarian and spot the assets that are undervalued, and then undervalued versus another asset class, like I showed you the miners versus the XLE, the energy sector, then you could see that those oil plays are undervalued versus, could they keep getting undervalued versus miners? Of course, that thing could keep going up. What I'm telling you is the setup's there. If ever the gold and silver miners start underperforming the XLE chart on the way down, that's a big warning sign. Hold on, guys. And then you start sniping your best oil plays, whatever it is, XOM, CNQ, Suncor, another great looking chart, SU. You start and you buy those. And I didn't even show you the dividend plays because those mining companies don't give you dividends. Those oil plays, dividend adjusted, they're rocket ships. Even if that chart shows you sideways, if you would have held those and reinvested those dividends, those charts have actually been in bull runs for a while now. I have to show you. I'll show you again there. Maybe I shouldn't have stopped sharing my screen there, but let me just share that one more time. I'll show you like a dividend adjusted version of Suncor. Does Suncor have dividends? So look at this. Suncor is breaking out, not dividend adjusted. Look at that there. Some type of breakout. If I did dividend adjusted, look at that. Look at Suncor dividend adjusted. See, guys, that's not dividend adjusted. Look at that. Look at that. Just
9 day.
So it's going up and up and up. Had the dip here, but it's doing higher highs. Just a beautiful uptrend, giving you returns on the dividend adjusted chart. So that's another thing to do. Is those oil charts? Most of them give you 5%, 8% dividends. Look at those dividend adjusted charts because that's really going to give you your true return on investment. And then you'll say, oh my goodness, man, I could have just held Shell for the past 10 years and I would have, made great profits over that period. So, and the miners, again, they're overvalued. Well, not overvalued, but they're outperforming the energy sector. So wait for the flip. And then that's the next opportunity, guys. It's right there in front of you there.
Interesting. Yeah. Oil has been on my radar for a while now. And you look at oil to gold, gold to oil. I I mean, they are in outlier territory based on the basis of that ratio. Oil is, I think, is at a historical discount to gold, more so than any other point in time, I believe. I'm sure you've looked at the chart recently, but yeah, oil, and I believe you also said copper. Is that the other one?
Yeah, copper's already on the move there. You see the copper chart there; it's already breaking out. I think it broke out last month. They're in uptrends. People doubt. It's like there's always reasons to doubt. There's a recession, whatever. But at the end of the day, guys, just focus on the chart. Is it going up? Is it trending upwards? Yes, you're making money. You don't need to be a contrarian to hold for years while the price goes nowhere, while there's assets actually trending upwards, where you could actually make money starting today. Like sometimes it's weird, because people have an idea of, well, I studied this sector for X amount of time. I could just play that sector because I understand the fundamentals of that sector. Fine. But maybe you don't know anything about the oil sector, but that thing's breaking out and moving upwards. So you want to make money or you want to be right on your thesis? You got to choose.
Well, Patrick, it's a pleasure having you on as always, my friend. Anything else you want to talk about before we take this thing home?
That's it, man. Always a pleasure. Thanks for having me on again. Guys, be nice in the comments. TA is not tea leaf reading. You'll see there's actual value. If you go back down my feed and X, you'll see there that, possible roadmaps do play out and they give you an edge there. You just gotta take time to observe what the charts are actually telling you. And it's all good. BadCharts 1 on X, NorthStar BadCharts.com. Guys, it's a paywall, but that's where we put all the good stuff also.
Yeah, get what you pay for. Well, hey, thank you so much for coming on, Patrick. I appreciate your time. Guys, if you enjoyed this video, be sure to hit that like and subscribe. Comment go, Patrick, go in the comment section. If you agreed, let me know. If you disagreed, also let me know. I do read every single comment you guys post. I may not be able to reply to each and every one of them, but I do read them. And then by liking, subscribing, commenting, you do help in pushing this channel in the algorithm. So it may not seem like much, but a little bit does go a long way. And then finally, check us out on Substack at CapitalCosm.substack.com. So with all that said, I will catch you all later. Have a good one. Till next time. Bye.